What is cracking, lads? We are here with part 3 of 6 of our last week's combine review, where we're going over July 9th, so that Tuesday after the weekend of the 4th. And this day we made $582. I think that after yesterday's rough day mentally, we definitely came back and started to fix some loose ends and started to employ better habits. I still didn't think I had the best day, as I gave myself a C plus because I think I overtraded and I wasn't sizing properly in each trade that I was doing. Um, but I was struggling with the entry timing as well. So the only reason I was sizing up instead of down was because I was gaining confidence as I realized my mistakes of the day. But again, sometimes you have to just let these mistakes fix themselves on the next day instead of trying to make up for it the same day because you are risking blowing your account out of size and taking more risk than is necessary. So it says here I could have leftover patience for the PM2 for one major move. So exactly what I mean. You're making mistakes on trades early in the day and you're trying to make up for them, but at the same time, you're not giving yourself any more patience, any more energy to come back in the PM to get a maybe even easier power hour move because you're trying to make up for your mistakes in the morning. So enough of that. Let's go in. Let's check the news first of all. As always, this day we had 10 o'clock news, red and orange folder. So we're definitely going to stay away from trading until 10 o'clock, but it doesn't matter because we're still going to pull up the charts and still going to see what's going on. And just as you could tell from yesterday, we are still running it up seemingly endlessly. If we're not running it up during, the silver bullet hour, we're just running it up in the post market anyways. So either way, we just keep to seeing running it up, and at this point now, it's been a few days of saying that, so now I get a better idea of okay, we might just want to be looking for longs. If we're going short, there's got to be a lot of confluence for that. So zooming in a little bit more now, since these are the last relevant sell side liquidities, the time frame doesn't really matter, like I said, because again, we're getting no chance for retracement. It is just pump, pump, pump. So looking in the morning now, we got to drop down to the 15 minute. See the morning action here. Let's play it over to 9:30, just so we can get a good idea of what we're gonna be dealing with. So right there, and boom, right? So we already know 9:30 is going to start pretty bullish, as it has some days before. I would draw this buy side liquidity in, but again, I don't think it's going to matter very much, as it's probably going to get taken very quickly. But the sell side, we definitely can have. It'll give us the best idea if we are going to be bearish in any way, because this is where it'll start. I won't even start thinking we're bearish until this is taken aggressively, right? And you can see here in the AM, after this pump up, we kind of retrace down, but again, we're starting to kind of gain that momentum upwards. And then finally, after taking some sell side, we're going to go up as soon as market opens. So we're going to drop down to 5 minute now. Kind of just going to be greasing over, seeing if there's something important to see in terms of SMTs, in terms of just really anything we can find. Not really. So no fair value gaps, no nothing. This is pretty much all choppy action. So if I am going to take a trade in some kind, I definitely want to see us leave this range and in a way that tells me we're going to be bullish, especially because bullish is good for me here. So the first few minutes, we can actually just let this play over to 10 o'clock, but just because we're already here, we'll just fill in some fair value gaps that we see. So this one, of course, it's just negated. Same thing with this bearish one, negated. No trades needing to be taken because, again, we're just trying to get a feel of what's going on until 10 o'clock passes. Okay, I think that's pretty much all we have there in terms of displacement. So we have a bullish displacement canceled and a bearish displacement canceled. Sorry, I struggled there with that one. And then here we kind of have an order block. If you like to trade those, I believe this is what you'd call an order block. But the way I consider an order block, at least, is when you have, basically tweezers, either bullish or bearish, is what I call an order block. So if we have big bullish push and then followed by big bearish push, tweezers bottom, big bearish push and then bullish push, tweezers top, basically. I don't know if I have those backwards, but you get the idea. It's just a big area of contested action, and it does tap into there and reject. So I'm kind of thinking We are looking a little bit bearish, but of course I'm going to need a lot more confluence than with the bullish action. So I'm pretty much going to just let action play till 10 o'clock always in this case. But just because we're here, I always like to be looking for SMTs because I do tend to miss them. So we can see here, yeah, I think we're getting an SMT here pretty soon. I want to see if that gets taken. 10 o'clock is almost here, so let's just let 10 o'clock play out. So nothing really happened at 10 o'clock, which is kind of surprising. And at the same time, I'm definitely going to consider this an SMT. Let's take a look at when our first trade was here. Yes, and it's continued, so we can just do this. This would definitely tell me we have an SMT, because if I don't do this and then draw another one, it's almost the same thing to me. That you get the idea. Like, we just have two separate moments of higher highs and lower highs. See, same thing. But now here, I want to see when I took my first trade. So 9:40. Okay, so we did take some pre 10 o'clock trades, right? And like I said, there was no action here to tell me which bias we have. So that all of these trades should not have been taken, and that's why I should have been done through the 10 o'clock trade, because we happen to get that push, that short 958, which is right here. So we got the SMT, and I essentially used the SMT and said, just especially because ES is the one pushing higher and this one's the pushing lower, I'm pretty much guaranteed to get a free short. And that's pretty much what I did. I had it for 3 minutes, 10:01, and I pulled out. And I should have been done there for sure, because I was already making mistakes trading choppy action. But of course, I did not listen to myself. At least I had two quick in and outs, because I realized that my trades were not they were not validated enough. Same things with these. I didn't check the news. I didn't know that it was at 10 o'clock, I guess. And either way, even if I didn't know it was at 10 o'clock, I'm trading 942 at 955 because of this. So where's 942? Right here. So 942, I have one bearish fair value gap, not even validated. No reason why I should be taking a short. Again, we have a high here, a low, and that's it. So there's really no reason to be taking a short here at 942, especially because this probably comes up. That's probably what stopped me out. Yep, and then same thing at 955, which is right here. I'm assuming this is going to be the high, but I'm not seeing this short. This should be taken first if I'm going to take a short right here. As you can tell from the last video, like I said, if we're not making lower highs and lower lows, then we're just chopping, because this is just a lower high, but this is also a higher low. So our range is just shrinking. That's not really, cause for a short. This, if anything, this is more of a pennant structure where it's going to break out in a particular direction where I can't exactly predict where that direction is going to be. If you guys study your chart patterns, maybe you draw something like this. But I'm not really one for chart patterns. I don't care about that stuff anymore. But if you care enough to draw, your chart patterns and stuff, I guess that's a pennant. And in terms of pennants, they can break out really either direction. So it's not really a reliable strategy in itself. But that's why those two trades were bad. That's why this trade I got pretty lucky on. I just used the SMT, basically banked on it. I had really no reference of where it was going to go. I think my take profit might have been here, and then I kind of just pulled out when I saw that retrace was kind of aggressive. So good on me there, but just with those three trades alone, that's not a very good day. And I think that's kind of why I didn't stop trading, because I always want to finish on a good day. But sometimes a good day is you stopping when you know you're making mistakes. So just keep that in mind here. Anyways, that was a lot of yapping, but continuing on with our action. Now that we know there's no reason to have a bias yet, the SMTs do tell me we're pushing lower, which is good. And this bullish fair value gap is getting invalidated, which is good. So now I can lean a little bit towards bearish more. I'm kind of thinking more bearish, especially if we push past this low here. That'll be good news for me, because we have a high here, we have an SMT, we have a low. If we push a little bit lower, especially past this low, then we're looking good. Another high here. You get the idea. So let's just see how this plays out. Okay, so just with that push alone, now I'm definitely going to be thinking about a quick short. We have an inverse here that we could use, but of course I like using our pure fair value gaps for entry and inverse for during the trade. So what we're going to do, we're going to use our retracement tool. We could retrace from here to here, but I think I actually prefer to do this, especially if market conditions are, it just depends on if the market conditions are more aggressive or passive. If we're more passive, I might be inclined to use this kind of retracement. If we're very aggressive, I may use this one. So just for now, we're going to leave it on the last leg, very last leg. And we're going to also slow down the time because we may be looking for an entry. I would like to see a fair value gap validated once more, but because of that SMT, I am kind of inclined to jump into a trade, especially if I have the 15-second. But, I'm going to take a moment here, really think it through, say, should I really take a trade here? Look for what I can see. And yeah, I think I kind of would want to take a trade here. If I would, I think I would do something like this, maybe at the bottom of this fair value gap. This really tells me we're in discount and we're going to push lower. If we are, I can keep my risk nice and low, probably at the top here, 9 points. I could even do up here now with the 9 points. Most of the time, I think I'd probably be putting my trade here, which is a mistake because, again, the market can aggressively retrace and not care about what you think is going to happen. So always play it safe. It'll save you money. So yeah, we're going to do it here pretty much, making sure we get in 27 points. Pretty much guarantees we can touch that low at least. All right, so let's see how this goes. Okay, so as you can tell, this trade would have gone very sideways, and I think I actually took shorts here. Exactly. So at 10.10, where's 10.10? Right there. So at 10.10, I actually probably took this short, and I pulled out very quickly, seeing how bad it was going with the 15-second. So this is kind of an unexpected, and that's why, again, you want to see these confirmed first before going fully short, because this is a little too early still. Only using this inverse and an SMT, this SMT is only going to pretty much guarantee me that this low is taken. You have to take the SMTs into account for what they're trying to tell you. There's no reason that this SMT should justify taking this low and then this low. It's only going to justify taking one internal low pretty much. So I'm kind of glad I was a little bit wary of that early trade. But now that I see this action go sideways, and especially reviewing this trade right here that went sideways twice, now I definitely know in the future when I'm seeing slightly choppy action and we just proved that I can go bearish, I'm going to want to see one more confirmation so that I can have full confidence in that. And now because this is happening, I definitely have no confidence in any of this. I have no valid fair value gaps essentially at this point. So, I may be prone to flipping bullish as well. So, did I actually take any longs at the end? No, I did end up taking a short at the end at 10.17. So, we're going to see how this goes, but in terms of, this wake up, action is purely choppy. Okay, but of course we have an SMT here, and that is definitely going to be my basis for my last short, because if it weren't for that, I definitely would not be trusting it. And because this SMT is here, I can guarantee we're either going to take this low or this low. This is obviously the most aggressive low I could take, so I'm probably going to go for a safe one and go for that low right there, especially if this gets invalidated. So where's 10.17? Just the next candle. Boom. So taking this short, I'm probably going to be doing something like this. All right, we're going to have our 9 points. Yep, just above that wick should be okay. And then we're going to take our 27. Okay, so yeah, we can even go lower. 34 is nice. We may be able to extend the risk just a little bit. And let's see how this goes. 10.17, all right. Let's see if we took this trade. Okay, yep. Looking good, big drop. And there we go, take the profit. I want to see if we hit that lower low though. Okay, we do, but it is aggressive. Okay, so it's not the best idea to go for that low, but I'm most confident that I definitely went for that one. The fact that it's 680 actually too, and it's two shorts, the fact that I went for 34 points, I think that actually calculates exactly to 680. I don't want to pull up a calculator and look stupid, but let's just do it. So I'm over there 34, 4 ticks times 10. This might have been just a 1 contract trade and not 2. I'm not entirely sure, but yeah, 68 ticks actually is not that. So I should have gone for that full amount. I should actually be getting 1360 if I'm doing 2 shorts with this exact setup here. But what might have happened is I might have been playing it safe, been a little bit scared, and just pulled out or something like that, which makes me very sad. But I think if I did this trade now, this is exactly what I would have done, and it looks very good to me. But I think at least after this part, I recognize we're done. Safe TP. Yeah, that's exactly why. I was just too scared at this point. My confidence was kind of hurt at this point, and I was just trying to walk away positive something. And that's a lot. It's a lot to walk away with this much, with this, this kind of confidence level trade where I'm pulling out extremely early. But things happen. It's all right. We're reviewing for a reason. We want to get better. We want to have confidence in every trade we take, win or loss, because that's what's actually going to guarantee that we make money over time as a trader. So after this, we're kind of just pumping down. There's really no reason to take another trade at this point. Even though I was done with my day here, this would have been like the only trade you really need to take today. Like if you took this trade and you're done for the day, you are literally an A plus trader because you're waiting for all of this. I mean, you could have taken a small trade here as well with this SMT, but I think it kind of just wicked down too fast for anyone to get that. But if you took this as well, you're a trooper. But this is really the really good trade to take today because of that SMT and because of this little choppy action and then finally that dump. And then using that inverse fair value gap as support. It really just looks perfect here. The best thing you can do after this is wait for a retrace. Try to get in on the action after we come back to discount. But as you can tell, I think it's going to be dumping a little too aggressively for that. We can try to see if it retraces. We have a nice big fair value gap here to trade off of as well. Let's get rid of this because we know it worked. So we barely tap into that, right? It doesn't mean it's supported. It means it hasn't been tested yet. So we're going to wait for it to come in. If I really do want it to be taken, we can get rid of this now because it got taken, right? So I'm kind of skeptical. There's something I'm waiting to see here, and I'm not entirely sure what it is. And yeah, it's this SMT right here. So they disconnect momentarily. So what does that mean, right? It means we're going to probably take this internal high, guaranteed. Doesn't mean we're going to come back up and take this high, right? So if I do want to take a short, this SMT kind of helps because SMTs to me feel like a little unnatural. It's almost like the market gives you this signal that like we have to push this, like we have to. It's not like, it's not like a extremely fluid price action thing where the market is just so efficient it leaves you behind. It's more like one of those we're desyncing for a moment before we make this like weird move. So when I see SMTs, it's like I really like to see them for that reason because it gives me a good idea of where we're going to guarantee to take, but at the same time, it's not completely like taking over price action. Like if I still think price action is going a certain way, the SMTs are kind of like those nudges to help start those moves or end those moves. So like I really like using SMTs in conjunction with my other bias so that I make a really informed trade. And here I would like to drop down to the 15 second, but I don't think it's available and I don't want to risk having to scroll all the way back to this data. So I'm just going to assume we don't have the 15 second here, and I'm trying to look for the best place. And the best place to take a trade is definitely right either on this level or on this level. And that's because of this low, which now becomes old support becomes new resistance. And the same thing with here, this old support will become new resistance. So it depends if I want a more retraced trade or if I am willing to risk a little bit more. And that all depends on your risk tolerance. So if I'm already doing good on the day, I'm probably only going to risk 9 points. And that probably means I wanted to obviously go above the fair value gap. So I'm probably going to go for this old support instead. Probably going down just a little bit just to give it a break. And then we're going to go for the 27 points. And there's plenty of points to spare here. So even down there, I think I could honestly justify going even lower. But for now, we're going to leave it here until we see action, right? Okay, so we're in and then we're back out, right? So that didn't work out. I want to see if we do push lower though. Okay, so yeah, we would hit take profit, and this is a really good point I want to make here. In the past, my risk tolerance has always been 9 to 27, and recently, especially making these videos, I have been noticing that when the price action is going aggressive like this, like when it's like almost too fast for you to keep up with and you have big fair value gaps like that, you want to have different sets of risk tolerance to take profit depending on the market conditions, because I was experimenting a lot with the 150K account, and I went for like one trading day where I was trying to do a 6 to 18 risk tolerance, and that was just always too low because that's only going to work with really, really slow market conditions, for example, pre-market. But I always trade intraday. So 9 to 27 is like the absolute lowest I can go. So when I see market conditions like this is a perfect opportunity for me to experiment and to use the new risk tolerance I like, which is 13 to 39, and which would fit this trade 100 times better in this situation here. So now you see that if I did this instead, we'd be getting in the trade right here, and we're most likely going to be hitting our take profit as well. Boom. So I actually do have this on my live account now. I have a 13 to 39 and a 9 to 27, depending on the market conditions, because of this right here. So if you took this trade as well and you recognize that as well, I really commend you. You are an S tier trader, because not only were you able to catch this SMT trade and get a really nice short in, but at the same time you were able to get a retrace and adjust your risk tolerance to be a little bit wider for this particular situation. I think after this, there's really no trades I'd want to take, because, I mean, this is just masterful at this point if you're able to do both of these things. And you're probably walking away with hundreds of dollars on the day as well. But if you are looking for another retrace, we can always just take a look, see if there's anything worth doing. We're going to get rid of this. Our fair value gap here held, right? And then now we're looking for this leg. There's only so many legs you can get in a trend though, and as you can tell, we did not push lower than here. So I'd be suspicious of this trade for sure. I would only want to be taking this fair value gap at this moment for this trade if you missed the initial drop. But I don't like missing initial drops either, because now you may be chasing and you may get caught up in a really aggressive retrace. So you may have taken this fair value gap, right? So let's say you did. Again, this is a case where you want to do the 9 to 27, because you don't really need your risk to be much higher than that. Now that you've created a new lower high, right? It shouldn't be going much higher than that. At the same time, you should be looking for your SMTs here, seeing if there's anything, which there is not. So that's good news. And then you can set your 27 risk tolerance, 27 take profit, which works out. This would be, I guess, the best, I missed the first drop kind of trade to take. But again, I don't recommend those. I like the full retracements after the full leg is formed. So let's just see if we happen to go back into discount there, and we don't. I think if anything, this is kind of what we do. So yeah, so now that this full leg has been formed, the retrace trade I would want to take is more like this. We're going to use a 5-minute as well to confirm that we are still downtrending very heavily, which we kind of are. So if we do retrace into here, that is good news for me, and it's a good trade to take. I think maybe if I missed absolutely everything right before lunch hour, this would be the last thing I'm willing to take. The very, very, very last trade I'd be willing to take. We're going to do 9 points here as well, I think. I think that fits this one kind of nicely. 27 points, I'd want to target this low at least, but, if you want to go for a clean 1 to 3, that's up to you. Let's see if this holds. Okay, so we just barely missed it. Okay, we do come back. And I think this would be a point where I just wouldn't even get in the trade, because look, this is our last low. We're going higher, higher low, higher high. This is this is an SMT actually. So what does that tell me? We're probably going to push up to a recent internal high. So I would definitely not be taking a short here. If anything, I would actually reverse my opinion and take a long. And this kind of doesn't retrace enough for me to even get in on the long. So Again, at this point, there's no trades to take. Just wait for lunch to pass, come back power hour, see if there's anything good for you to take. But I think for this video, that's good enough. I think some days the AM action is just so good that if you miss your opportunities, there's no point in coming back at 2 to 3. So with that, I hope you guys enjoyed this quick review of our July 9th trade, and stay tuned for the next.